Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Monday, October 2nd, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's talk about that. Tonight, we delve into the intricate dance between the crypto world and various power structures. Will Bitcoin maintain its golden status amid government turmoil? What's at stake for Sam Bankman-Fried as he faces a monumental trial? As Ross Ulbricht marks a grim milestone, we look back at Silk Road's complicated legacy. Meanwhile, Coinbase gets a warm welcome in Singapore, but what does that mean for its US operations? Swiss bank UBS is making waves on the Ethereum blockchain, and Grayscale aims to revolutionize Ethereum trading. Lately, we've been talking about the recent political drama that could have led to a US government shutdown, but it didn't, and Bitcoin reacted in a way that's worth discussing. At the 11th hour, Republicans and Democrats struck a deal to keep the US government running for another 45 days. This is not a permanent solution. It's a band-aid. The disagreements over funding levels, borders, and the Ukraine-Russia war are still there. But for now, the government stays open, and the US citizen bears the brunt of this political circus. Now let's talk about numbers. As news broke, Bitcoin shot up over 3% to hit 28,000. It also collided with its 200-week moving average, a critical resistance level. As of the latest data, Bitcoin is sitting at $28,360 apiece. If it consolidates above this level, we could see it test the local high of just under 32,000. Bitcoin's dominance in the crypto world also spiked well above 50%. On the flip side, the Dow Jones Industrial Average declined 171 points, or 0.5%. The S&P 500 fell by 0.3%, while the Nasdaq Composite rose 3%. So while traditional markets were shaky, Bitcoin showed resilience. Jay Hatfield, CEO at Infrastructure Capital Management, attributed Monday's tech sector rally as a relief sentiment from the averted shutdown. But he also pointed out that interest rates are the dominant factor in trading right now. The Senate passed the resolution just before the midnight deadline, and President Biden signed it into law. Initially, equity futures were in the green, but they fell into the red before the markets opened. Why? Because investors are now focusing on surging interest rates near 15-year highs. The 11th hour deal to avert a U.S. government shutdown had a ripple effect on financial markets, but none more pronounced than Bitcoin. While traditional markets like the Dow Jones showed a decline, Bitcoin seized the moment, surging past significant resistance levels. This is a testament to Bitcoin's resilience and its role as a sort of financial safe haven during times of political uncertainty. The Dow's decline and Bitcoin's surge presents a stark contrast. It's almost as if the investors are saying they have more faith in a decentralized digital asset than in the stability of the US government. And if so, who could blame them? Both the Dow's dip and the spike in the 10-year Treasury yield indicate that traditional markets are still heavily influenced by government actions and are not immune to the chaos of political brinksmanship. Bitcoin's dominance spiking above 50% is another key takeaway. It's not just leading the crypto bull market, it's dominating it. This could be indicative of a broader shift in investor sentiment, favoring Bitcoin over other assets, including altcoins. The 45-day extension gives Bitcoin another window of opportunity. If the bulls can maintain momentum and keep Bitcoin above its 200-week moving average, we could see it test new highs. But let's not forget, liquidity is still scarce. Unless another significant event prompts more US dollar printing, progress may be slow. Yet the message is clear. In a world where traditional systems are showing cracks, Bitcoin offers not just an alternative, but perhaps a better way forward. In essence, Bitcoin has once again proven its mettle by not bowing to political uncertainties. It's a reminder of why we're all here. For a financial system that doesn't play by the rules of centralized entities. That Bitcoin resilience, it may help us weather storms like what SBF is facing. Speaking of Sam Bankman-Fried, his trial kicks off tomorrow, and it's far from a simple legal hiccup. Here's what's unfolding. And hey, if you're as glued to these narratives as we are, hit that follow button. You won't want to miss a beat. 9 months and 20 days. That's how long it's been since Sam Bankman-Fried was arrested in the Bahamas. And tomorrow, he faces a trial that could lock him up for a very long time. That's according to a federal judge. The U.S. prosecutors are armed with thousands of pages of evidence, including internal documents and audio recordings. They aim to prove that Sam knowingly defrauded customers and business partners. Now, the most damning evidence might come from SBF's own circle. Former colleagues and friends like Caroline Ellison, Nishad Singh, and Gary Wang could play pivotal roles in the trial. Ellison, who was emotionally involved with SBF, has a diary entry that could be crucial. Prosecutors also plan to call up FTX customers and investors, including those outside the US during the trial. And I didn't have this one on my FTX bingo card at all. But apparently, Sam considered paying Donald Trump $5 billion not to run for president. You heard that right. Now, this claim comes from Michael Lewis, the author of The Big Short. SBF was not just pondering the amount, but also investigating the legality of such a payment. Mark Botnick, a spokesperson for SBF, declined to comment on this jaw-dropping revelation. But wait, there's more. FTX announced a $600 million crypto loss the very same day it filed for bankruptcy last November. Around $26 million in Ether moved out of a wallet just this weekend. No explanation has been given for this mysterious movement, but you can bet federal investigators are on it. In a twist, Judge Lewis Kaplan ruled in favor of the DOJ's motion to prevent Bankman-Fried from discussing what his lawyers may have advised about FTX's operations in his opening statement. However, the defense can still raise the advice of counsel defense later on. The trial of Sam Bankman-Fried is more than just a legal battle. It's a spectacle that could shape the future of crypto regulation. The charges against him are severe, and if proven, could set a precedent for how U.S. government tackles fraud in the crypto space. The fact that he considered paying Trump not to run for office raises questions about the ethical boundaries that he was willing to cross for personal or political gain. Also, I think it was rather silly. I don't think there's any way you could throw enough money at Donald Trump to convince him not to run for president. Not anymore. The revelation about the $5 billion offer to Trump is particularly intriguing. It's not just about the audacity of the offer, but about the implications for democracy. Sam's actions, whether legally defensible or not, have opened a Pandora's box that the crypto community, regulators, and indeed the entire nation will have to grapple with. So as we await the unfolding of this legal drama, one thing is clear. The outcome will have far-reaching consequences, not just for Bankman-Fried, but for the entire crypto industry and perhaps the fabric of American democracy. From trials yet to unfold to sentences long past, we pivot to Ross Ulbricht. As SBFs Trial starts, Ross marks a decade in prison. Two Bitcoin pioneers, two vastly different fates. Could this be a glimpse of what awaits SBF? Let's dive into the Silk Road saga. Ross Ulbricht is the man behind the first modern darknet market, Silk Road. He hit a grim milestone, 10 years in prison. Arrested in 2013, Ulbricht was handed a double life sentence plus 40 years with no chance of parole. The charges? Operating a platform that facilitated illegal activities, all transacted in Bitcoin. Silk Road was a pioneer in a way, the first of its kind to use Bitcoin as its sole currency. From 2011 to 2013, the platform processed sales totaling 9,519,664 Bitcoin, roughly equivalent to $1.2 billion. Ulbricht's cut? A cool 600,000 Bitcoin, or around $80 million at the time of his sentencing. Ulbricht's case has polarized opinions. On one hand, he's hailed as a Bitcoin hero, a man who accelerated the flagship cryptocurrency's adoption. His mother claims he started Silk Road to create a, quote, truly free market, leveraging Bitcoin for its monetary freedom. On the other hand, the platform he created was a haven for illegal activities, including the drug trade and money laundering. Ulbricht himself has shown remorse. In a recent post, he admitted his poor choices led him to his current predicament. His only recourse now? A plea for mercy. Public sentiment is divided. While many call for clemency, citing the harshness of his sentence, others point to the darker aspects of Silk Road. The prosecution even claimed that Ulbricht had hired hitmen, although he was never officially charged for this. The Silk Road saga serves as a cautionary tale, but also as a testament to Bitcoin's disruptive potential. It provided early liquidity to the Bitcoin ecosystem and showed how cryptocurrencies could become the go-to option for transactions, especially in a world leaning towards decentralization. So, as Ross Ulbricht marks a decade behind concrete walls and locked doors, the debate rages on. Was justice served, or was it a miscarriage? Either way, the Silk Road's legacy, for better or worse, is indelibly etched in the annals of cryptocurrency history. While some crypto giants face the gavel, others get a nod from regulators. Coinbase just scored a big win in Singapore. The question is, can the US learn a thing or two from this tiny island nation? Turn on those notifications to stay updated. Coinbase has been granted a major payment institution license by the Monetary Authority of Singapore. Now, this is a big deal, and it's a stark contrast to the regulatory quagmire Coinbase faces in its home market, the United States. So, what does this license mean? It allows Coinbase to offer a wider range of digital payment token services in Singapore. Both retail and institutional customers are in for a treat. And let's not forget, Standard Chartered is Coinbase's local banking partner in Singapore. The company has even tailored its products to meet local demands, offering simple account funding options like Pay Now and fast bank transfers. Now, why is this significant? Singapore is a crypto-friendly hub. Despite recent crises involving local crypto firms, the MAS is still willing to approve licenses. Coinbase joins a dozen or so other crypto operators in the region. This is a clear sign that Singapore is miles ahead of other crypto hubs, especially when it comes to regulation. Coinbase's country director for Singapore emphasized the importance of clear rules. He said that this license marks the end of their licensing journey and enshrines their commitment to the Singapore market. Coinbase has been actively collaborating with major local blockchain firms like Nansen AI, Blockdaemon, and Infura. While US regulators are dragging their feet, Singapore is laying down the red carpet for crypto companies. This move by Coinbase is a message to regulators worldwide. If you don't adapt, you'll be left behind. Kind of a reversal role play. This license also lifts transaction limits for Coinbase. They're not subjected to the usual 3 million Singapore dollars limit for any payment service. This gives them more room to breathe and operate, a luxury they don't enjoy back home. So what's the takeaway? Coinbase's new license is a win for the company and a win for the crypto community in Singapore. But it's also a glaring spotlight on the shortcomings of the US regulators. While the US is embroiled in legal battles, Singapore is fostering innovation. It's a tale of two approaches, and right now, Singapore is winning. From a US crypto exchange to a Swiss banking giant, it seems like everyone's setting their sights on Asia. UBS is making Ethereum waves under Singapore's Project Guardian. What's it all about? Keep listening and find out. UBS, the leading Swiss bank, launched a live pilot of a tokenized money market fund on the Ethereum blockchain. This is a part of Project Guardian, an initiative led by the same Monetary Authority of Singapore we were just talking about. UBS isn't new to the blockchain game. They've been at the forefront, issuing digital bonds and even a $50 million tokenized fixed-rate note. But this move is monumental. Why? Because it's not just about UBS or Ethereum. It's about the seismic shift in how assets are managed, traded, and even conceptualized. The pilot allows UBS to test various fund activities on-chain, including subscriptions and redemptions. They're using their in-house tokenization service, aptly named UBS Tokenize, to carry out these activities. This isn't just a one-off experiment. It's the first of several live pilots that UBS plans to launch. Thomas Kagi, the head of UBS Asset Management in Singapore and Southeast Asia, stated that this is a, quote, key milestone in understanding the tokenization of funds. The project aims to improve market liquidity and market access for clients. And they're not going it alone. UBS plans to collaborate with both traditional financial institutions and fintech providers. Now let's talk about that Project Guardian. This MAS-led initiative aims to tokenize various real-world assets. It's not just about making transactions faster or more efficient. It's about redefining what a financial asset can be in the digital age. And it's not just a Singapore thing. The Japan Financial Services Authority has also joined the project. So what does this mean for crypto? It's another nail in the coffin for the naysayers who claim that blockchain and crypto are just a fad. It's a challenge to central banks and governments who are still dragging their feet on blockchain adoption. Now, speaking of Ethereum, Grayscale is looking to transform Ethereum trading. From Swiss banks to US investment firms, the stakes for Ethereum are sky high. Subscribe and stay tuned for this game changer. And our last story of the night is our cover story for the night. Grayscale Investments is a name that's become synonymous with crypto investment products. Well, they made a strategic move that could redefine how Ethereum is traded in the US. The firm, in partnership with NYSE Arca, filed for approval from the US Securities Exchange Commission to convert its existing Ethereum Trust into a spot Ethereum exchange-traded fund. Grayscale's Ethereum Trust is no small thing. It's the world's largest Ether investment product with nearly $5 billion in assets under management. $5 billion. That trust represents 2.5% of all Ether in circulation. Now, why is this a big deal? Well, Grayscale CEO Michael Sonnenschein puts it quite well. Converting the Ethereum trust into an ETF is the, quote, natural next step in the product's evolution. This move aims to bring Ethereum even further into the US regulatory framework. And let's not forget, this comes after Grayscale's court victory over the SEC this past summer. The firm is also awaiting SEC approval to convert its Bitcoin trust into an ETF. But Grayscale isn't alone on this one. Other asset managers like Invesco and Galaxy Digital have also filed for approval of a spot Ether ETF. The competition is heating up, and the SEC is right in the middle of it. The timing is also crucial. The SEC recently cleared the first Ether futures ETFs launched by VanEck and ProShares. Grayscale's filing comes on the heels of this development, signaling a broader acceptance, or at least consideration, of Ethereum-based financial products. Grayscale's been in the Ethereum game since March 2019 and became an SEC reporting company in October 2020. The firm has also filed paperwork for a new Ether futures ETF under the Securities Act of 1933. They previously filed for a separate Ether's futures ETF under the Investment Company Act of 1940. These are the regulations under which commodities and spot Bitcoin ETFs are filed. Grayscale is making calculated moves not only to expand its product offerings, but also to push Ethereum further into the regulatory spotlight. And given the firm's legal victories and the SEC's recent actions, it seems like the US regulatory body will have a hard time saying no. If they pull this off, it could set a precedent that challenges the SEC's stance on cryptocurrency, further eroding the government's grip on decentralized assets. So, what happened? In the US, a political circus ended with a last-minute deal averting a government shutdown. Bitcoin reacted positively, hitting a new resistance level and proving its resilience in times of political uncertainty. Traditional markets? Not so much. Sam Bankman-Fried's trial is gearing up to be a spectacle that could shape crypto regulation for years to come. From surprise testimonies to audacious political plays, this case raises serious questions about the ethical boundaries within the crypto space. Ross Ulbricht hits a somber milestone, 10 years behind bars. His legacy, both laudable and controversial, has sparked renewed debates over the ethics of decentralization and the severity of his punishment. Coinbase gets a green light from Singapore's monetary authority, contrasting starkly with its regulatory battles in the US, a tale of two approaches indeed. UBS takes a monumental step by launching a tokenized money market fund on the Ethereum blockchain, part of Singapore's Project Guardian. This is a move that could redefine financial assets in the digital age. Lastly, Grayscale is pushing the boundaries again, aiming to convert its Ethereum trust into a spot Ether ETF. This is a calculated move that could significantly impact Ethereum's future in regulated financial markets. Tonight's overarching theme revolves around the resilience and adaptability of the crypto ecosystem amid external pressures, from political brinksmanship to legal hurdles. We explored how Bitcoin is becoming a financial safe haven while traditional markets wobble. We delved into the legal dramas and ethical conundrums facing high-profile crypto personalities. And we took a global tour to witness how regulatory attitudes differ from the US to Singapore, affecting major market players like Coinbase and UBS. These stories are part of a broader narrative shaping the future of digital assets. They highlight the ongoing chasm between old-world financial systems and the new decentralized paradigm. The actions and decisions covered tonight will have ripple effects, changing the course of crypto history, one headline at a time. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.